Good afternoon, traders. This is Christian Farmers, Tropic Trade Group, and today is Monday, December 5th. Let's go through. We've got a lot to kind of cover quickly. Today was a very, for lack of a better word, very interesting day. Really nasty participation, breadth. We'll talk about that. We'll also talk about where that kind of leads some of the indices. But you could see a lot of red on my screen. For example, SPY was down 1.8% for the session. The Dow outperforms the rest of these indices, still heavily down 1.3%. Really, where there was some, I'll use the adjective nasty, was in the small caps and in a couple other areas of the market too, which we're going to get to. But the IWM was down 2.7%. It just kept on going lower. So we've talked a lot about the IWM and small caps and wanting to see them actually kind of take the initiative and actually start to kind of lead the market a little bit. But that's not what we had today. So that could be telling of what we're going to see in the short term. Before I get into any of that, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So let's start with, we'll talk about what we saw in the breadth today. Right, here is, I put this in Bloomberg, but we have an indicator on the bottom left, which associates values. And you could see negative 12.4. If I expand this, and really, like, this is just kind of an intraday indicator just to kind of tell you, how severe either the buy pressure is or the selling pressure. It looks at not only advancing versus declining names, but it associates volume with advancing and declining. And what it translates to is it gives you a sense of just if there's some big buyers or if there's just heavy selling pressure, and where that selling pressure is in relation to different exchanges. And you could see a negative 12.4 NYSE, right? You could see even on this, and even though this is not a an indicator that we use for more than one day, but you can go back and look at some of the times where we've had some bad market breadth. 11.9 was one day where we saw some selling pressure, but we managed to bounce back after that. That was the day before the CPI. And then we also saw the last big breadth day was where we had a really big turn in the market. I'm trying to remember what that day was. Maybe was it a Fed day? I'll have to go back and check because I didn't bring it up. Let me see if I can find it really. All right, well, there it is. I did find it. 9/13 was when we had a CPI report that actually came in hotter than expected. And you could see that was a big turn of events. We kind of rallied up to the bottom of value back on 9/12. And then 9/13 was when we had that really, what happened to this indicator here? Let's see if I could just go like this. Oh, it's not letting us see that. But in any event, I'll go back and I'll show you on another screen. And again, today I don't want to jump to conclusions, but I think that you really want to watch to see what happens, if we kind of, start to turn lower here, or if we can stabilize, because this was the last time, and this particular day, the breadth was worse. But you could see the turn in the action that we had thereafter, and we did go lower for a good couple of weeks before we straightened out. So got to be careful of some of these big breadth days. So here's what it looks like, if you do want to look at this indicator and the readings so that it's a little bit more straightforward. But again, here was the big September date, and this was the biggest down day with volume. This is just NYSE breadth, by the way, and not the other ones, but since 9/13. So that makes me a bit cautious to see that type of selling pressure. Again, we're in December, so we haven't seen this in almost 3 months in terms of this type of selling pressure that we saw today, and this type of a reading. So that was the first theme of the day, is just, really horrible breadth. Right now, let's go through the indices. I always start with the S&P. Really where I will begin to kind of make decisions is if we break the 20-day moving average. I also don't like the move back into value here. Notice, we had this nice pop above value. A couple of days, it was kind of saved on Friday, where we had a really nice move off the lows. But we're back inside we're back inside the value area for the month, and really what I'm watching is the 20-day moving average. Not a good sign. Too is price dipping back below the 5-period moving average, but really the line in the sand for me is the 20-day moving average. I think it's perfect for now. It's okay that we're retracing part of this candle. And really, if to put things in perspective, we're basically just back into this range. Now, if we break this, then it's another situation, right? So 20-day moving average, that's right around 39.72. And if we look at the 1-hour chart, which I love to look at, I look at multiple time frames. We call it multiple time frame analysis. Really 39.68, which is close to the level that I just mentioned. That's where we found support last week, and we rallied off of that. So, would I be surprised if we saw a retest of that? No, I wouldn't. But, let's see if we can hold that. Okay. If we do get down there either tomorrow or later in the week, what I try to do in my analysis is not jump to conclusions unless you actually have like a really big break of support. So again, I'm on watch for that because, we could definitely see that. But right now we don't have that yet. Okay. We do have a break back below that 20-day moving average, and I wouldn't be surprised if we cross this 200-day moving average a couple times. Let's go over to so again, I gave you levels that I'm watching on the daily chart, 20-day moving average, and bottom of value, which is right around 39.68. Right now we had a little bit of a bounce at the end of the day, but I'm not sure if you can really kind of hang your hat on that. We'll see what we do in the after hours market. So I mentioned IWM. Let's go to the daily chart. So IWM, notice that this has been going back. So this is why I said I wouldn't be surprised if the S&P does this. Look at how many times the small caps have crossed back and forth around the 200-day moving average, right? So there's a lot of indecision around this, right? Here's a cross back above, cross below, cross above, cross below, cross above, cross below, cross above, and then today cross back below, right? So I always think it's funny when either Twitter or financial media adopts some type of a conclusion when the first time that you approach like a moving average and it doesn't make it through, and everybody goes, oh, it's rejected, right? Thinking like that's automatically going to bring a move back to the lows. Doesn't necessarily mean that, and you can see this oscillating now back and forth. Now, this is the only one of the major indices that actually broke the 20-day moving average. That doesn't, I don't like that, right? So, it did just barely close below there, but I like to think that the small caps actually sometimes lead, and they're more of a risk on proxy for me. So I don't like this move below the 20-day moving average. Is the game over for small caps? No, because, again, like, do you conclude that we're going to go all the way to the lows? No, because you've got a lot of support in here. You've got 180, right, which is the bottom of value for December. And then you also have the 50-day moving average, which is down here. So it still has a lot to get through, and it could find support there, but these are a good distance away. So, reducing risk for some trades, I think, makes sense, right? Let's also look at the diamonds, because that has been the strongest. It's funny because I put out a chart over this weekend. I had time to do a lot of chart studies this weekend. And one of the things that I talked about was, and I try to put this in a neat graphic with the arrows, but I said, hey, we took out this virgin point of control, right? We kind of stepped back a little bit into the top of value. And here's what I wrote about this, and I think this was yesterday. I said, it's been the strongest of the US major indices, even though it's only 30 names. Upside VPOC taken out could be a place of digestion, because we often see that once a level of high volume that we haven't been back to, once we come and take that out, we often see it's almost like a gap being filled, right? We talk a lot about that in these end of day videos, but you have that taking place. And I said, really what I would want to see is if we kind of hold in here, right? And if we can, then maybe we can kind of set our eyes up at 358 if we can get back above this first red line. Notice that we're back inside value, right? And we're now indicating 80% bearish rule, which means that there's an 80% chance that we go all the way through this value area. Before we do that, we're going to have to see what happens here at the 20-day moving average. But for now, it kind of looks a little bit textbook, right, that we're doing this. Now, again, we could see if something like this plays out. Here was the last VPOC takeout. Notice same thing, digestion, but we didn't break, right? So we're going to watch that again in here. Are we just going to get a little bit of digestion, or are we going to, actually have a real break? So again, I, for one, would not jump to conclusions quite yet. Maybe, another down day, and you'll probably hear me be a little bit more negative. You'll probably hear me talk about, reducing some more exposure as well. All right, but that's what this shows you for diamonds. The only one I didn't go over, oh, by the way, and also, because I like to go over the 1 hour charts, but there's also support down here at 338, right, which is another $2 down. Again, little bit of a bounce here at the end of the day, but also could look like a little bit of a bear flag too. We'll see how this develops. Also note that we're below this 200 period moving average, which is something that we held on Friday, right? I was going to show IWM here too. Same kind of thing. A deeper pullback than we saw on Friday. Support down here at 181, right? And then finally the Qs, which actually held up a tiny bit better today, but on Friday, this is something I had to leave early Friday, but we talked about a couple things, right? That this VPOC was taken out on the 1 hour, and that was kind of the kiss of death on Thursday morning, right? Friday, though, with the volatility on the jobs report, we held where we needed to. Right, so we're kind of back into here, and again, a little bit worse here. So if things don't recover, you can begin to drift your eyes down here into the bottom of value areas on all of the exchanges that we mentioned. All right, let's talk about sectors. Okay, so very inconclusive, but definitely leaning to the downside. Some things broken. But I'm watching these 20-day moving averages. That's really the line in the sand for me, and that's something that we covered over the weekend in the macro video. Okay, let's talk about what I thought was really interesting today, which was the move in energy names, as well as the regional banks. Right, if you go back to our spreadsheet, right, this was if you dark red. Now I have this sorted by percentage change from the open. But look at the damage that was inflicted in these areas, right? Energy, metals and mining, banks, all down, around 5% for the, over 4.5% to 5% for the session. I mean, that's pretty nasty. So crude, again, once again, the early rally was faded in crude, and try to get back into the value area for the month and move down. Now, I've been very cautious on energy names. I just have not liked how crude has looked. I don't like how it's behaved. Now, again, energy companies can, go move a little bit outside of what the underlying commodity does, but you also see this weakness going on in nat gas too. Rallied up to the 200-day moving average. This I would consider a rejection. Spent some time here. Even though it went back and forth a couple of times, you kind of have to wait a little bit, but there's your rejection. And if you go through, we'll start with XLE. We gave a webinar last week for members, and I said, hey, this is, somebody asked me, and we went over the chart of XLE, and I said, it's kind of right now, it's a little bit of indecision. This was last week. And today was a big break. We broke the value area. Now there is some support down here at the 50-day moving average, but I think that this has lost its momentum, and it may either continue to break down, or it may consolidate here. But I don't think that the upside momentum, comes right back into this. And if you look at the equal weight ETF, energy ETF, this looks more susceptible. You've got smaller cap names. More smaller cap names in there than obviously XLE, because XLE is market cap weighted. And then if you want to look at OIH, you got a really nasty looking candle for the day. That is a big bearish engulfing candle. Try to go higher for the day, engulfs these other candles and broke the value area. If I were to short one of these, it would probably be the OIH, because I think there's more of a distance to go down to the 200-day, 50-day moving average. Helene Meisler was pointing out how she saw weakness in the refiners towards the end of last week. Yeah, I mean, look at what some of these things have done. Keep in mind the refiners were the strongest. So interesting that they took out, of the different names and groups in the energy sector. I think, with the outperformance that we've seen in energy this year, you probably have gotten to know some of these energy groups pretty well. You got the refiners, you got coal, you've got some of the drillers, you've got some of the bigger names, right? There's 4 or 5 different groups, but look at Dino come undone, which was a really strong name. I actually tried MPC a little bit last week. And again, thank goodness for stop prices, because, hey, I was like, let me get into a little bit of exposure. I was like, this MPC has been very good on dips. And it just didn't look right to me. And I got out of this trade, right? This was around 120. Let's see, where did I get out of this trade? Let's do MPC. I took my stop 121. I paid 124. So 121 was, I think it was either this day, right? Or it was, I think it was actually, I have it right here. 11, on the 30th. Right, I didn't sit long in this trade. Once I thought it looked, once I thought that the energy group didn't look great, I exited there and really kind of saved myself. Right, and again, it's very important to have your stop prices set before you get into the trade. All right, so just some thoughts there. I mean, look at Valero too, right? Another refining name, strongest of the bunch coming undone. I would watch the coal group too, right? Now, I know BTU is a heavily shorted name, but this is the second strongest group, I think, has been the coal group out of this. So I don't know if I will be looking to short any of these, but I did exit in the TTG trend portfolio. And I actually exited my XLE trade about, I think, 2 weeks ago out of that portfolio. So I just didn't like what I was seeing and decided to get out there. All right, so that's energy. We'll go through just a couple other sectors, but again, like this is something also that you could put into the category of I really didn't like that move in the banks. For the banks, I kind of use them more as an indicator. I'm not really trading a lot of the individual banks, but I do use these things to say, hey, that doesn't look right, right? And not only, I mean, that's a pretty big move, down 5%. There must have been some heavy selling pressure that was happening in that group. Also note that they kind of stalled for a little bit, right? KBE, which is all banks, took out that VPOC to the downside. All right, so that's really where there was a lot of pain in this market today. XME was also an underperformer, very tricky. And sometimes the markets will be this way. Look at the candle today versus on Friday. On Friday, you probably thought, hey, these things are really strong looking. Sometimes this metals and mining group can be tough, but again, look at the candle on Friday and look at the candle today. Really, kind of a dangerous move like that to see. No, it's dangerous, probably not the right word, but just very, very tricky, right? And I actually took off a trade which I was long into from last week, which was FCX. I didn't even see where this thing closed, but I just didn't like that some of these things were reversing early on. So I saw FCX was up to like 40.50. I looked at it in terms of taking a target, and I decided not to, and wanted to see how it was going to open up. So I got out right at 40 once it started to kind of give back gains. That was a trade that I put on last week, so that was kind of saved in terms of a good trade. TH was a trade that I've been holding for roughly about a month, and I took my profits on this one. I didn't have a huge position in this, as $15 stock, but I got out right at 16 bucks today. All right, so that was a nice one as well. A couple other areas where from the weekend watch list, Boeing actually did pretty well today, up 1.2%. Right, I'm still like a big fan of the of the defense names, and they just had an inside day. So that's kind of how the day started. It was like, hey, there might be some opportunities. If you didn't want to, if you kind of held back and didn't add a lot of trades on Friday, which I didn't. I was a seller on Friday with that price action at the end of the day. And if you don't believe me, even though I was out most of the days, but I did take some targets. I actually had to post them a little bit after hours, but there you go. I mainly was a seller, and I actually got involved in a little bit of ENPH today, which actually held up pretty strong. So there are some areas of this market, and that's why it's kind of really to be determined. I took targets in both of those. New trades for me today. I added just a starter in the beginning of the day. I got 2 targets in this. We went to the top of value for the day in ENPH, right, which encouraged me to take some more off the table, which was right in here. We actually went a little bit higher. So again, this stock looks okay, and I think that you might see some names. Again, there was a lot of bad today, but it wasn't 100% bad today, right? It's probably the best way I can kind of I could put it. The semis were also an interesting group today. They're not, I wouldn't say falling apart, but I think you have to kind of keep an eye on them, right? Also, inside value for the month, watch 229, and then the 20-day moving average 216. Again, really can't make a decision yet based on this. Have to see which way it breaks. All right, guys. So that is it. I would say overall, here's the rest of the trade blotter. I did take off the trades that I least liked. ON actually hit a stop, so that was easy. The trade I put on Thursday just did not get off to a good start, and decided to take that one off. I mentioned TH. I also took off CPNG. Just didn't look right to me. I think the last target I got was $20, but just down too much. Right. And I think there was one other trade that I took off too, which I can't seem to find it in here. And then of course I did add a hedge, and was able to take some profits in the hedge trade. And I still have a portion of that on. Maybe if we get a little bit of a bounce tomorrow, right? If it's some type of a turnaround Tuesday, you might see me add back some of those targets. Because while, as I talked about, in the macro video, I said we're kind of at a pretty decent indecision area in the market. Some people think we're going to go higher. Some people think that we're going to go lower. That's fair. But it seems like it's cut down 50-50 in terms of that. There was a poll that, again, I mentioned Helene Meisler again, because she runs a weekend poll, what the next 100 points are in the SPX. And for the 3rd week in a row, it's been split 50-50, right? So while we were kind of, hinging at a particular, indecision area, I decided to add a hedge last week, and I'll continue to kind of hold that hedge and maybe add to it on, possible bounces. I think right now that's the way to go for this market, until we see more of a clearer picture. Guys, that's it for today's video. Have a great night. See you tomorrow.